Hey there, YouTube family. This is Josh with Stocks with Josh, and this is the Small Account Challenge update. We're looking at Verb stock. We're trading it on the NASDAQ. We're using the moomoo application, and we're trying to move $200 to $400. And right now, we've been in the green for at least a week now. If you're not participating, in the description of this video is a link to moomoo. Download that. Put in $200 and follow along, and I will give you your entry and your exit prices. If you are new to the page, please hit that like, the subscribe, and the notification bell. If you're part of the fam, then hit that like for me and throw a comment and say hi in the comment section. Okay, guys, so my call for Bitcoin on Sunday. I just want to take a quick look at that real quick. I told you guys that we had a pretty strong line of support at around 28,800 that we had dipped below, right? Now this was a classic, it's really a classic bear trap. And I want to explain that to you guys real quick. So once a pretty strong established trend line occurs, what will happen is people that want to short it, if it breaks that trend line, they'll line up their orders right beneath that trend line, okay? And so what the market makers will do is they will drive the price below that support line, and it's a support line because that's where the buyers are lining up, preventing it from going down. So they will push it past those buyers, and it'll trigger all of these short positions, right? And then they turn around and they pump it up so they could liquidate all those shorts. I called this out on Sunday. I told you it was setting up that way. And, here we are Tuesday, and we've had a pretty big pump and rally. And I would say that at the moment, the candles are looking like it still wants to go up, but we'll see. At this moment, they're not as clear as they were on Sunday. But I wanted to talk to you guys about those trend lines and why we look at them. And we're going to look at the Verb trend lines now, next. Okay, let's jump over there. Okay, so we've had this entire time these descending support lines, right? And we saw that similarly, kind of in the Bitcoin story, we saw a break beneath that. Different reasons, okay? This had more to do with volatility in the market, and I believe a lot of people were getting liquidated. We broke down, we've curved over, and now we potentially are building a new support line that is trending upwards. Now this is not established until it hits this line at least 4 times, right? So we'd have to see it do that for us to have the opinion that that is going to continue to work as support. Right now, what is positive is that we're seeing this consolidate and move sideways. I would also say that we want to be mindful of the fact that we are sitting at resistance. And so we're a little bit in a place where we want this to break out upwards to the upside. It does appear like it's setting up. I'm going to throw in the RSI on this so we can look at that, guys. RSI is the relative strength index, and it measures buyers over sellers or momentum. I've talked about this a lot over the past. Right now, the middle of this chart is the 50% mark, and at that point there is an equal number of buyers and sellers, and you can see that Verb has been moving up to that place where there's an equal number of buyers and sellers. And so when the last time it did this was right here, okay? It came up, it touched the 50% mark, and it activated a bunch of sellers that were waiting up here, okay? And it pushed the price back down into oversold. So right now we've been slowly creeping up on that 50% mark, and what we're looking for at this point is a comprehensive break up into this zone, right? And we've talked about this before. When it's above 50%, that's when buyers have control. We want to see it definitively break up into this area, and we want to find support back on the 50% without seeing it break back to the downside. So that's just a quick review of the charts regarding Verb. I want to point out some basics to you. Breakdown price, the greatest area of support that we have is still 0.46 cents. Okay, so if we get below 46 cents, that's what's called a breakdown, and we are likely to go back into the 30s. So you need to be mindful of that. Right now, we're at the 50 to 52 cent price. That's actually at resistance. If we break above it, we're likely to shoot pretty much straight to 60 cents. So you need to be mindful of that. We're still holding our target price of 0.98 because that's our little bit of a longer view. This trade is going to take a little bit of time, but I think it's setting up really nicely, and it's been a great example for technicals and charting. All right. A lot of you ask me questions about about the trade types and the order types and the functionality of moomoo. So I'm going to briefly blown up some of those screens so they're easier for you guys to see, and I'm going to go through those with you real quick. Okay, let me jump over there. Okay, guys, one of the #1 questions on limit orders is everyone kept saying that I put my order in, but at the end of the day, it got canceled, and I had to put it in again and again the next day. Guys, when you choose the order type up here, there's another option. It's called time in force. It's defaulted to day, which means that it's only good for the day, and at the end of the trading day, it'll cancel. You go over here to this little downward facing arrow, and you change day to the second option, which is given, which is good till canceled. I want to briefly talk about trailing stops. So I just want to talk real quick about stop losses in general. They're such an underrated feature for many retail traders, but I want you to conceptualize it with me. Now, I'm not a gambler, but I'm going to use a gambler example. Now, you go into a casino, and again, I really don't have a lot of time in casinos, so if I get the terminology wrong, you guys can tell me in the comment section. But, if I understand it correctly, the roulette wheel is a choice between the red and the green, and you go in and the guy puts all of his chips on green or red. Let's say you put all of your money on green, right? And they spin the wheel, they drop the ball in, and it's either going to land on the red or green. If it lands on the color you didn't choose, then you lose all your money. If it lands on the color you did choose, then you double your money or something like that. So you drop the ball in, they've spun the wheel, and you wanted it to get in the green, but you see that in just a few inches, it's going to drop into the red. Imagine if you had the ability to quickly reach into the wheel and grab the ball and pull it out. Okay. Now, of course, if you did that at a casino, you would lose all your money. I assume they would tackle you and arrest you and throw you in prison. I don't know. That's what I imagine. But in trading, that's what a stop loss is. Okay, you have sort of a guaranteed way to exit your original position of risk. So it's such an underrated thing. But the reason why people struggle so much with it is they don't know how to use it. If it's used incorrectly, they can basically find themselves constantly getting kicked out of an order that they want to be in. Now, we originally set this up as a trailing stop so that when we got to the position that we're in now, when we get a little bit higher to the 60 cent range, we're going to have an option. We're going to have to have a decision to make, okay? Because truthfully, I think Verb can go long. I think we can get into $2 and $3. You guys know that the target is $4. So if we're selling it at 98 cents, we all know that we're potentially selling it short of its potential. But what we can do is we could activate a trailing stop at that time. And I want to just show you in this picture what that looks like. So the way a trailing stop works, okay, is this blue line represents the price of the commodity. So let's just say that we are owning Verb and it runs up above $1.20, goes up to, let's say, $1.30, okay? We can set the trailing stop to come up in the same amount. So if there's the difference of 10 cents here, and we have the trailing stop set at, let's say we have it set at 50 cents, it would then go up to 60 cents, locking in more of our profits, okay? That's the way a trailing stop works. So it will only turn on if it goes, it'll rise with the rise of the price, and it'll only activate if the price drops from its highest point down a certain amount. So I'm going to take a look at those screens. Okay, guys, so here's a trailing stop. Okay, this is the moomoo ordering screen. We're in trade, so we've selected trailing stop. Okay, now you're given two options in there. You're given the option of amount and ratio. If it were ratio, then it would be a percentage. We could basically choose that we want it to activate after 10%. But in the case, now this is not the advice, okay? I'm setting you up so that you thoroughly understand what our options are going to be. Because when we get to a certain point, it's likely that I'm going to tell you guys to raise your price, your market if touched, lower your market if touched, activate your trailing stop, and I want more of you to understand these features. The last time we went around, two things happened. One, most people weren't paying attention to their YouTube and didn't get the message. And those that were paying attention to YouTube, a lot of them put their orders in incorrectly, and so it didn't work out the way they expected. So before we get to a place where this deal closes, I want everybody to be as correctly familiar with the order types as I can get them so that more people can be successful. All right, let's look back at this one more time. All right, if we choose an amount, a trailing amount, okay, that it means that as the stock moves up, we could choose 30 cents, okay? If it goes all the way up to 98 cents and we chose 30 cents when the price was at 51 cents. Let's say we chose that today. So if we chose this today, this would not sell until it got to around 21 cents. Okay, that's when this would sell. Okay, if it ran up to 98 cents, it wouldn't sell unless it ultimately came back down. Okay, so on the trailing stop, this particular amount is not the exact position in which it will close. It is a trailing amount, a difference, okay? I also want to point out to you guys, again, the only way this is going to succeed when I do tell you guys to activate either a trailing stop or to change your market if touched is if you select good till canceled for the time in force. Otherwise, you'll miss out. All right, let's keep going. We're going to go through this really quickly. I know that some of this is complex and new to you guys, but just give me a little bit of time to introduce you to it, okay? This is your order book, okay? On one side, you'll have the bid, and the other side, you'll have the ask. And what I want to point out to you is visually this wall of red, okay? And each of these breaks here represents a different price. So I'm going to tell you guys this first wall is at 0.96 cents, okay? So a lot of people have their sell order in at 96 cents, something you guys need to be aware of, because if we're setting our market if touched order to 98 cents, but the true stop area is 96 cents, it means that we might not activate our take profit. So just be aware of that. It's another reason. I'm okay with it sitting at 98 cents right now because it would take just a small venture capital firm to come in, drop a pile of money, and that thing would just shoot up to $1.20, $1.30 very quickly. Because again, this is a low float stock. It means it doesn't take a lot of money to move it. And that's sort of one of the things that you could say I wagered in setting up this particular trade, is that it wouldn't take much to get all of our smaller positions into profit very quickly. So I'm going to go through a couple more of these charts with you guys. This is the market if touched. And a lot of you have asked me, what is the difference of the market if touched to a basic limit order, okay? So here's the disadvantage to a limit order and the advantage to a market if touched. If you put a limit order in at 0.98 cents and it goes up and touches 0.98 cents, there's a lot of people who are trying to sell their shares at 0.98 cents. It will not, and the price drops down, not everybody's order will go through. It has to be matched up to buyers. And so what could happen is, let's say you have 430 shares of Verb and you have your sell order at 0.98 cents. If it runs up and touches, it might only sell 50 of your shares at 0.98 because it's set as a limit. If it drops to 0.97 cents, the other 350 of your shares will fail to close. Okay, so the advantage of the market if touched is if we get that spike up it'll create a market order and it will sell your entire position, even if the difference is between 0.98 cents and 0.96 cents. If we get that run up, we want to sell out and take advantage of that swing up in the price. That's the difference between a market if touched and a limit order. Okay, guys, don't forget, if you want to participate in this challenge, I'm giving you guys the prices to go in. We're reviewing it every week as an opportunity to learn how to swing trade. In the description of this video is a link to moomoo. Download that, fund it, and you'll catch up with us in time. Appreciate you guys letting me be part of your financial journey. Hit that like on the way out, and I'll see you in the next video. Thank you.